Bloomberg Audio Studios. Podcasts, radio, news. Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, CoreWeave signs a deal to supply Meta with as much as $14.2 billion worth of computing power.
Plus a change of leadership at Spotify as CEO Daniel Ek stepping aside after almost 2 decades.
And Anthropic releases a new AI model designed to code longer and more effectively than prior versions. We speak with Anthropic's Chief Product Officer.
But first, Ed, we are both here in New York this week and checking out the markets that are just taking a pause amid some macro focus, of course, potential shutdown of the US government. That's on every investor's mind. What does that mean in terms of data? What does it mean in terms of the future of rate policy for the Fed? We're currently completely flat, just inching into the green on the Nasdaq 100, but it's way more interesting underneath the hood, and you're looking at that.
Yeah, our top story is CoreWeave and Meta. It's the latest CoreWeave capacity deal, $14.2 billion. The stock has been on a tear since its listing in March, right? Now trading at its highest level in around 6 weeks. Clearly, that big gain following the Bloomberg report. The market's kind of focused on this idea that it's evidence CoreWeave's move beyond one single customer, which is Microsoft. But actually, as Brody Ford often says, Caro, the devil's in the detail on this one.
Let's get that detail. Brody Ford's with us. You helped break this story. CoreWeave has tripled since its IPO. We're up another 15%. What does it mean to be adding Meta to the fold, as well as OpenAI more recently, of course, and Microsoft?
Well, it means that CoreWeave isn't just a colonial state of Microsoft, right? That was the concern for so long with these neoclouds that, gosh, if their biggest customers are companies that also effectively compete with them, that seems like a pretty indefensible business. But you start getting companies like Meta and OpenAI who are likely to be longer-term buyers of this technology. And so I think folks are getting more comfort that CoreWeave and companies like it may have a more sustained place in this AI infrastructure build-out.
$14.2 billion is a very large number, Brody, but the terms of the contract extend to 2032. You know what I'm going to say because we discussed it this morning. There is skepticism here because there are many unknowns. For example, does CoreWeave actually have a data center somewhere that's built and operating that they can assign Meta's workloads to?
Well, what the CEO told me is that they never sign a deal if they don't have the right power and data center allocation ready to go. I don't think there's a data center that they're just going to flip on and say, all right, Meta, here you go. But, you know, this contract goes till 2031. They're probably going to need to buy a bunch of chips, fill it up, and hand it over to Meta. And what that also means is they're going to take out a lot more debt. I mean, CoreWeave is kind of famous at this point for levering itself up to a pretty incredible degree, and we'll probably see a little more of that.
The role of debt in financing AI infrastructure, that's becoming a story of the year 2025. Bloomberg's Brody Ford with the CoreWeave Meta story. Thank you. Meanwhile, AI's boom is sending investors searching for trades in an overlooked group, suppliers of the gear used to make chips. Let's bring in Bloomberg's tech equity reporter, Ryan Vlastelica. Lots of readership on this story and some names that have not been at the forefront of what's happened within the semi space. Give us your reporting.
Hey, good morning. Thank you for having me. So yeah, this is a trend that we have been seeing throughout 2025. Now that some of the more well-known AI trades seems like maybe those are getting a little bit mature, investors are looking elsewhere. We've seen it in storage companies. We've seen it in memory companies. And now we're seeing it in the semiconductor capital equipment companies. Names like Lam Research, Applied Materials, KLA Core, Teradyne. These kinds of companies which make the equipment that is used for building the semiconductors, building all this manufacturing out. These are getting sort of a second derivative move, given the the sheer build out we're seeing, all the chips that are required for AI. Obviously, it's going to mean higher demand for the machines that make those chips.
We constantly question valuations, Ryan. Should we be worried about them for these names?
Well, I'd say if we were talking about this maybe a month or so ago, that would be a lot less of a potent issue, but some of these companies have really seen very steep rises. They've really become momentum favorites over the past couple of weeks and months, and I think right now they are getting to a little bit more elevated levels, but certainly they are not sort of a nosebleed, real sort of bubble kind of valuation, but they certainly come up a lot from where they were earlier this year.
Ryan, if you walk into a fab, a clean room where semiconductors are manufactured, along the line is machines from lots of different companies. At the beginning of that line, you're probably equally likely to have one from Lam Research. The chart that we took from your story shows Lam being a real outperformer here. Is there anything more to know about that name?
Well, I think they are one that is especially used with Micron, so the memory chips. That has been another area of focus this year. So that high bandwidth memory, I believe that Lam works on machines that are used in those. So I think that's probably certainly a component to that business there.
Ryan, it's always great to catch up with you. Ryan Vlastelica,
Thank you.
We appreciate it. Meanwhile, sticking with chips, so Taiwan's premier says that trade talks with the United States have entered, quote, the crucial closing stages, indicating the global chip hub is finally nearing a deal with the Trump administration. Now, investment in the US was among the issues discussed in Washington in recent days, according to a source, as well as lowering the 20% tariff imposed on the island. Ed.
Yeah, some other news we're tracking. Google's agreed to pay $24.5 billion to resolve Donald Trump's claims that being blocked from posting on his YouTube channel after the January 6, 2021 riot at the US Capitol amounted to illegal censorship. That's according to a court filing, which also shows $22 million will go toward construction of a new ballroom in the White House, a project near and dear to Trump, while the remainder will go to a handful of other plaintiffs who joined him in legal action. Okay, coming up. Anthropic has a new AI model that codes on its own for up to 30 hours straight. No need to feel it Soylent, no Red Bull. Anthropic's Chief Product Officer talks to us about Claude Sonnet 4.5. That conversation's next. This is Bloomberg Tech. DeepSeek updated an experimental AI model, calling it a step toward next-gen AI. The latest version introduces a new technique it calls DeepSeek Sparse Attention, or DSA, a mechanism designed to explore and optimize AI training and operation and improve efficiency when processing long text sequences. Caro.
Let's stick on the models. AI startup Anthropic is out with a new one, Claude Sonnet 4.5. The company says it can code longer, more effectively than prior versions. Let's get more with Anthropic's Chief Product Officer, Mike Krieger. Mike, it's wonderful to have you on. 30 hours straight is how long that it can code on its own. What are the technical feats needed to be able to go that long, where humans can, well, definitely not survive that unless there's a whole load of caffeine involved?
Good morning. I think one of the main advancements we made was around memory and what we call context management. So if you think about how a human works for longer periods of time, you're writing things down, you're making sure you can always pick up where you left off if you're coming back the next day. So with Claude Sonnet 4.5, we did a lot of work on that memory management. So the model, if you think about it, sort of writes down what it's doing, keeps track of its state, and then if it needs to sort of backtrack, it's able to then keep going. And that's how it's able to stay coherent for a much longer period of time than any other of our models.
How much have you managed to lower, therefore, those ideas of inaccuracies, or more broadly, that they're making things up? Hallucination has always been the key issue here and been something that's limited agentic AI adoption.
Yeah, this is the model that we have that is also, besides being our most powerful, is also our safest and most coherent. So it has the lowest hallucination rate and is the least susceptible to things like jailbreaks. And I think that matters a lot. I think I tell my product team all the time, it's no use going for 20, 30 hours if you're making mistakes along the way. And so having it be both accurate, producing good code, that's the prerequisite. And then you can focus on scaling up on the time horizon.
Mike, could we talk a bit about the audience for Claude Sonnet 4.5? The real emphasis from Anthropic from the early days was enterprise customer as opposed to a sort of direct to consumer. But this field of tools for the developer is expanding. It's probably more competitive. Who are you hoping uses this?
It's really, we've taken a business focus, but that also manifests kind of in the prosumer space. And so we have a lot of what we call power users who might be developers or might just be early adopters who want to bring AI to their work. So one of the things that Sonnet 4.5 can do, along with writing code, is also creating really professional looking Word and PowerPoint and Excel documents. It actually uses the same coding capabilities under the hood, but not to write code, but instead to produce documents. And that sort of capability means that we're starting to see adoption in the enterprise as well.
Mike, you and I have discussed this in the past. We know Mike Krieger as Mike Krieger, CTO Instagram. And what I'm seeing right now in the field of your peers is the reports on OpenAI and what Meta is doing in social media and video. Is that a direction you want the product team to take Claude in?
We're focused much more on the productivity use case. And so when I think about our roadmap, it's very much how do we take work off people's hands, or how do we accelerate folks and make them, the work the best that it can be? How do we automate your work in the browser? So much more on that productivity side of things. And I don't think you'll see us play very much in that entertainment space.
Mike, that productivity perspective, it's come under some concerns recently. Think about the MIT report. Everyone's suddenly talking about this. Only, 95% of the tests were basically failing out there in the wild. How are you making sure that enterprises adopt your products, but actually see the productivity gains from them?
I think this is really important, where if AI gets brought into the workplace without the right either tools around it or enablement, what you end up with is this disillusionment a couple of months later around, well, folks aren't adopting it, or it helped me a little bit but not enough. And so we have a lot of emphasis on, let's make sure the work is actually good. You might hear this word online like slop, where AI is creating work that actually is not very good. And I think of us, we're trying to produce the anti-slop work that actually maybe gets you 80% of the way there, but it's 80% that then lets you complete the work in a way that you're proud of, rather than, oops, it did something, but now I feel like I have to start over because it didn't really help. So I think that's the really key piece for enterprise adoption.
And therefore, does it remove the need for so many people? Or ultimately, there's still this argument, this can augment, but will it start to replace, Mike?
We think a lot about what the comparative advantages are of people, as relates to AI. There's a lot of still relationship building and trust, critical analysis, and strategy that really comes on the human side of things. And so we really try to design tools that, as much as possible, play up those parts of that human AI interaction, knowing that there will be labor shifts that are almost inevitable. But if we can design our products along the way to maximize both people's understanding of AI, but also their use in a complementary way.
Mike, OpenAI is holding Dev Day next Monday. It's probably on your calendar for peripheral awareness. But I'm very conscious that you're kind of speaking to us 24 hours after the news of Claude Sonnet 4.5 came out. Have you any data on the sort of reaction to it, early demand, and where that's coming from?
It's been really interesting how quick people are to adopt a new model. So by, I think, about 1 p.m. yesterday, we already had more usage of Claude Sonnet 4.5 than all of our other models combined, which really speaks to the eagerness of a lot of these startups that are using or building on top of our models, as well as early adopters. On day one, you saw GitHub and Cursor and Windsurf and many of these products that build on top of our models want to incorporate Claude Sonnet 4.5. And so we had this really early crossover moment as well.
That is interesting data. Correct me if I'm wrong, but this model is running on Project Rainier, right? Is that sort of operationally and infrastructure-wise where the training and now inference of it is being done?
So we do our both training and inference across, we have partnerships with Google and Amazon, but we have a significant part of this model being served now from Amazon as well, and we're seeing a lot of growth on AWS Bedrock as well.
Just going to that infrastructure layer, you're obviously the product visionary here, but you need to have the energy, the compute to bring your products to life. Many worrying that we're in some sort of bubble cycle around AI. How do you think about that as you drive this business forward, Mike?
I think there's this combined need to both scale up for the training side, but also on inference. And as we've scaled, especially with our business arrangements and the companies building on top of Sonnet, I think we now have sort of forward-looking perspective on what our inference needs will be. And I think that'll let us go out and also secure the kinds of compute deals that we need to both fuel the training, but also have that sort of revenue-generating inference side as well.
And we get so focused on the compute needs of the United States, but we've been talking a lot about that in Europe, how it's scaling in the UK. From your adoption, how are you seeing things different globally, Mike, of those that are actually deploying what's happened with Sonnet 4.5 and the latest models?
We see this a lot in terms of our global footprint. There's something we started expanding earlier this year. And so for our rollout of Trainium 2, which is the chip that Amazon has built for AWS that we use pretty extensively for our Claude models, a lot of that deployment is actually international. And when I go to Europe, for example, I hear a lot of questions about data locality and making sure that inference is happening in local data centers. And the only way we're going to be able to do that is to have that international footprint of these chips. And so you're seeing the same in APAC.
Mike, we are going to ask you a question about talent wars, but I'm just going to make an appeal to you to just be honest with me on this, how big a factor it is or isn't for you right now on the product team at Anthropic. In particular, I'm looking at the pace at which OpenAI is putting stuff out, Meta is putting stuff out. Just through your experience, what's the talent situation right now?
I'm seeing much more of that talent sort of back and forth happen within the research side in general, a little bit less on the product, although I think there's some key hires where that's been the case. One thing that's been a positive sort of maybe surprise or just outcome of how mission-oriented a lot of the Anthropic team really has been, it's affected us very minimally in terms of that back and forth that you're seeing maybe among some of the other frontier labs, which is very encouraging. Of course, we have to continue to make sure we build a great culture and maintain that mission alignment, but so far it's been minimally affecting us.
If we take Sonnet 4.5 as the case study, what were the types of roles that you needed to bring in to roll out the release?
I think people think of research and model science as being fairly cut and dry. I actually think that there's a lot of art and taste to it as well. You're making a lot of decisions from a research engineering perspective around what are the tasks the model needs to improve on, how will it improve on that, how will we know that it's improving on that, and so a lot of that reinforcement learning post-training piece is the key shape of what we really thought about in Sonnet 4.5.
Mike Krieger, Anthropic Chief Product Officer, was a real deep dive into Sonnet 4.5. Thank you so much for joining us back on Bloomberg Tech. Now, coming up on the show, DoorDash has a new autonomous robot. Meet Dot. Hi, Dot. We'll talk to the VP of DoorDash Labs about what this robot delivers in terms of its capabilities. That's next. This is Bloomberg Tech. Delivery company DoorDash is unveiling a new autonomous delivery robot called Dot. The company says Dot is the first commercial delivery bot to seamlessly navigate bike lanes, roads, and sidewalks. Here to tell us more, Ashley Red, Vice President of DoorDash Labs. This robotics experience includes work with Zoox, NVIDIA, but the real terms parameters for deployment, which cities, how many deliveries, when?
So we have been focusing on the greater Phoenix area, and that's our focus for this year. We are hoping to address about 1.5 million customers by the end of this year. And then, as we progress, we'll see what happens. Dot likes to travel, though, so hopefully we can expand to more cities.
Team, let's bring up some pictures of Dot again. I mean, to me, Ashu, this looks kind of the design a bit like a stroller or a pram, as we might have said in the United Kingdom. Could you just talk us through the design of it and how this is what you arrived at?
Sure. So there were three sort of key pillars for us when we looked into the design of Dot. The first one was product market fit. So we wanted to make sure that Dot would have the right cargo capacity and the payload that it can carry, up to 30 pounds, fits a vast amount of the DoorDash deliveries that we do today. The other big part was it had to be going at speeds that allowed us to do a big chunk of deliveries in the 3 to 5 mile range. And that's why the design point was it needs to be able to go on bike lanes, on roads, on sidewalks. But the other key part is the pickup and drop off for deliveries, which makes it very different from ride hail. And one of the key feedbacks we had gotten from merchants was it is absolutely imperative to have the robot come as close as possible to the merchant right next to their doorstep, which is what Dot does. And so that was a key design feature, was that it could go on sidewalks and be sort of narrow enough to navigate sidewalks pretty well.
That what, Ashu, currently isn't on the market? Because you were already using Coco Robotics, backed by Sam Altman. There are others on the market. Is it just the speed, the pace that they can't meet?
Yeah, so we actually also announced the key product called the Autonomous Delivery Platform, which we actually, in which all our partners, including Coco and our drone partners and other robots, including Dot, can participate. And the idea is that as the demand for delivery is growing, we have an all-of-the-above approach, which is there'll be Dashers, there'll be drones, there'll be Dot. And so we are looking to work with all of our partners to enable this different modalities. So we believe the future will be multimodal for our delivery, and this is the first step towards that.
I cycle every day. I navigate Dashers. how many dashes will I be navigating in the future? Is this going to replace couriers in the longer term? How much of a percentage do you want delivered by dot?
Well, we don't look at this as a percentage. We look at it as just a growing pie. So if you think about the just over the last few years, DoorDash, the demand for delivery has been growing significantly year over year. So we think of this as, like I said before, it's just going to be multimodal. There are going to be many, many different forms of delivery. And you look at the range of deliveries we do. If you just look back to even 5 years ago, we were doing mostly restaurants. Now DoorDash does groceries. It does household items like, toothpaste, or diapers, even home electronics. You can buy a complete laptop on DoorDash and have it delivered to your doorstep. So we expect all kinds of deliveries to be happening on our platform, and this ADP that we announced yesterday is the first step towards that.
Ashu, who is going to manufacture Dot, and where will they manufacture Dot?
So at this point, we are going through that process of figuring out all of the pieces of where the manufacturing is going to be and where all the components, etc.
So it's not decided?
It's still being discussed internally as to how we will end up doing this.
Is the aim to have it largely US made?
So the technology that we have developed here is all built here in the U.S. in DoorDash Labs. So it's pretty much purpose-built, homegrown robot, and it uses a state-of-the-art technology, again developed by the engineers at DoorDash. It is a fully L4 autonomous system. So as you can see, it navigates through all of the various situations it can encounter, whether it is pedestrians or cars, and again, going up on sidewalks, going up to your doorsteps, lots of pedestrian and what are called VRUs, vulnerable road users, which means kids, pets, and so on. So all of that technology was developed at DoorDash Labs.
Wow, I see it motoring along at 20 miles an hour next to me on the cycle lane. So shortly, I'm sure. Ashu, thanks so much for joining us. Ashu Rege, Vice President of DoorDash Labs at DoorDash. Now coming up, AI chip startup Cerebras Systems. Well, it's closed a new funding round, an over $8 billion valuation. We're going to talk to the CEO, Andrew Feldman, because remember, this is a company that actually wanted to IPO. Does that delay that inevitable? We could talk the ambitions next. Ed, what are you looking at?
That's a private markets conversation. In equity markets and technology, there is some stuff going on. I mean, the broad story is that we are basically flat on the NASDAQ 100. Traders are in wait and see mode. Will we get some economic data? Will we not? But we know the big story out there on the single mover side is CoreWeave, up 13%, highest level in 6 weeks on a $14.2 billion compute deal with Meta, which is down 1.5%. So much more to come on the show. Stay with us. This is Bloomberg Tech.
Welcome back to Bloomberg Tech. Let's check in on these markets because on the surface, some calm. We're currently off by just 0.25% on the NASDAQ 100. Anxiety about a potential government shutdown here in the US. What does that mean for key data in the jobs market, particularly on Friday? What does it mean for the Federal Reserve? We stand pat in terms of big tech. But underneath the hood, let's look at individual movers because there are some big deals being done. Once again, in the spectrum space, we are having the best month for EchoStar on record, up more than 20% because it keeps on selling spectrum. This time we understand it's likely to be selling to Verizon. There's talks of plum at the moment for AWS, 3 licenses. Already they've been selling to AT&T and SpaceX. Let's have a little look at what's also on the move. Big deals being done in AI compute. We're going to delve into that throughout this section. We're up 12, call it 13% on CoreWeave. $14 billion deal to Meta, yet more GPU access, more compute. But we've got plenty more when it comes to the world of AI infrastructure, Ed.
Yeah, a lot more happening in technology in private markets. AI chip-making startup Cerebras Systems has closed a $1.1 billion funding round. Cerebras, which aims to rival NVIDIA, now has a post-money valuation of $8.1 billion. The company's CEO, Andrew Feldman, joins us for more. Andrew, good morning. Welcome to Bloomberg Tech. You know, my assessment of where Cerebras is that you claim that the technology is as competitive or better than what NVIDIA's systems offer, and you are aggressively building out that infrastructure, and you are doing deals with end customers. In the context of this funding round, what's your priority here?
Sure, I think it's not just what we think. Every third-party benchmark has shown that we are order 20 times faster than NVIDIA GPUs for inference work. So that's for the using of AI. And so this is the largest and sort of fastest growing part of the market. So we wanted to fuel our continued extraordinary growth. And so we're going to use this money to double our manufacturing capacity. We manufacture in the U.S., and we're going to double in the U.S. To extend our footprint, more data centers, so we can support more customers, and those are in the U.S. as well.
Okay.
And to continue to invest behind our pioneering technology, which has sort of solved problems that were open for 75 years in the compute industry.
Andrew, to what extent are you supply constrained? In other words, you have all of these customers. Are you having to choose who gets first dibs when some capacity comes online?
Right now, one of the most challenging components is to get access to data centers. And those are some of the massive contracts you discussed in your previous segment with CoreWeave that they're providing to the likes of Meta. Meta is also one of our customers. But the ability to stand up and deliver data centers filled with our gear so that our customers can enjoy the benefit of the fastest inference through the cloud is one of the limiting factors right now.
You've got, 5 new data centers just in the course of 2025. Looking at Dallas, Oklahoma City, you're looking at Santa Clara. What's really interesting, Andrew, is that where are you building? Are you literally going out there building? Are you just trying to win future relationships with a CoreWeave so that they take your compute rather than that of NVIDIA?
Well, I think we are renters of data centers. We are not builders of data centers. And so we partner with those who own the real estate and those who stand up the facility. We fill the facility, we rent the facility, and then fill it with our infrastructure. And that infrastructure is then used by customers around the world, either by the day, by the month, by the token, to get their fast AI. And so I think that's the way we think about it, Caroline.
Andrew, we think about your customers, and you're mentioning the likes of Meta. I'm interested in also where the money has been coming from for this round, because I noticed that one of your key backers of the past isn't on the list. It seems G42, key investor in previous, and of course, Middle Eastern based, relationships potentially CEO with China. And that's been an issue for Cepheus in particular if you wanted to IPO. Have you decided not to take money from them this time?
No, that wasn't the situation at all. I think it is very common in your dash to get to being public to raise a late-stage round from public market investors. Our round was led by Fidelity and Atreides. It included Tiger Global, Valor, 1789. It included AlphaWave, all of whom have large and predominant public market practices. And so I think this was a round that was aimed at a different class of investor. We are continuing to collaborate with G42. They are our strategic partner. We are building enormous clusters in the U.S. For them. We are training models. We are serving models, including one that they built in partnership with their leading university in the UAE, MBZ UAI. So that partnership remains rock solid.
Andrew, quickly then, the obvious question is, does your ongoing association with G42 preclude you from pushing forward with an investment based on the history of the Cepheus review?
Oh, not at all. Not at all. I think each investor has their own appetite by stage. And what we found in this round was that the lead investors had a very large appetite. And so we were able to meet that appetite. We cleared Cepheus in March. And so there is nothing blocking the IPO rather than...
So when, Andrew, when?
In mid-March, we cleared Cepheus.
No, but when will you IPO? Dare we ask?
Yeah, that's the big question. I appreciate you asking. And as you also know, I'm unable to tell you with S1 on file, but I appreciate it.
We keep the dance going, Andrew Feldman. It's so good to have you, CEO of Cerebras Systems. We appreciate it. Look, we're going to stick with AI infrastructure now, because spending has been dominant theme in equities ever since ChatGPT turned everyone's attention to the technology and, of course, its compute needs. But the proliferation of data centers across the United States is putting pressure on energy supply and sending wholesale electricity costs soaring for you, for customers paying their bills. There's more on this with the big take. Let's bring in Bloomberg Power reporter Josh Saul, sort of Bloomberg Data Viz reporter Leo Nicoletti. And I start with you, Josh. The compute, you go down to the individuals this is affecting. You particularly go to Baltimore. Can you tell us a little bit about how you found these individuals and what the effect on them is of, well, basically all the data centers being built pretty close to them?
Right. So the headline here is that data centers and their massive power demands are driving up power bills for everyone. The people that we spoke to in Baltimore, some we found because they had testified in a city council meeting about their bills. Some we found because they were eating eggs next to us at a diner. We talked to a lot of people, and everyone's really upset and having a hard time paying their power bills because of this effect.
Leo, this is the latest in a series, really, of pieces of data journalism from this newsroom about the impact of the build-out in data centers. Just explain methodology and the data set that we arrived at that gave us that headline.
Yeah, so essentially we dove into very granular data on wholesale power prices, which is an important component of what then makes up power bills. And we looked at locations, tens of thousands of locations throughout the country. And we kind of related it to the location of data centers. And what we found essentially is that areas located closer to data center activity are much more likely to experience price increases than areas located far from data centers.
That's what's so interesting about Data Center Alley in the Virginia region, and this is why you go to Baltimore. Can you, therefore, Josh, just break down, us in New York, are we going to be feeling the impact? How are you going to start seeing people built up and affected by region that they live, and how certain local governments are going to have to stand in and help in some way?
Well, data centers affect power prices and your power bills in two main ways. One, they just use up so much power that economics 101, it makes power more expensive for everyone else. And two, they require so much infrastructure, new transmission lines, new power plants. The way utilities work is those costs are spread out among everyone. The reason this might matter for some of our listeners here, maybe they pay they're like, I pay my power bill fine, that's okay, and some poor people have a hard time paying theirs, okay, but it can really affect these companies, because if data center developers, big tech firms, have a harder time connecting to the grid, or if that's slowed down because of public anger, that slows down some of these AI plays like we were just listening to. And it can also hurt utilities if regulators tell them that they need to do something differently. That can affect everything from their share price to their future planning.
Leo, data analysis can take you in lots of different directions. So the headline is up to 267% more. But were we able to rank, in which geographies, regions, this gain in price is most present? And what are the factors behind it?
Yeah, so we looked at data, like I said, all over the country, tens of thousands of locations. And of course, there are areas in the country that are more affected than others, especially on the East Coast, the Northeast, the PJM grid in Northern Virginia, but also, interestingly, Baltimore, which doesn't have data centers immediately nearby, but it is actually very close to Northern Virginia, that is Data Center Alley. And what we found is people and locations in the Baltimore area were experiencing some of the highest increases, sometimes 3 times as much since 2020 in 2025 than other parts of the country.
It is today's Bloomberg Big Take, the impact of AI data centers on boosting the cost of electricity for consumers. Check it out. Bloomberg's Josh Saul and Leo Nicoletti, thank you very much. Now, coming up, shares of Spotify are lower today as the company announces changes in the C-suite with the departure of CEO Daniel Ek, and it is moving the stock a little bit lower. We'll have more next. This is Bloomberg Tech. Big changes over at Spotify. CEO Daniel Ek is stepping aside after almost 2 decades, leaving the leadership in the hands of Chief Product and Technology Officer Gustav Söderström and Chief Business Officer Alex Norström, starting January 1st. The two officers have been co-presidents since 2023 and have been largely leading strategic and operational development. Bloomberg's Spotify reporter, Ashley Carman, is with us on set. You know, the stock tells a story. It's down more than 5% on the news, but we gave the context. After 2 decades, Daniel Ek is passing on the torch.
Right, and a founder, so that's obviously always going to be big news, and investors always have strong feelings about that, but the way they're portraying this is that it's kind of status quo. They're saying Alex and Gustav have been doing this work essentially since they took over as co-presidents, and that Daniel's kind of the visionary and he's still going to be very hands-on. That's what they're telling everybody.
But what's not status quo is the world of music and the way in which Spotify is trying to identify new ways of doing audiobooks and trying to galvanize people perhaps around AI development of music and whether or not they want to be paying actual musicians royalties. How will these two leaders navigate that?
That's the big question. I mean, they're portraying this as a huge opportunity, right? AI music, huge new frontier, expanding to new markets that have never really adopted streaming or haven't in the same amount that the US and Europe have. But these are also the big challenges. I mean, there's a world in which if everyone can create their own music, do they need to have a streaming service? So these are the big questions that Spotify and Alex and Gustav are going to have to answer. Can they actually bring the value of AI, get these emerging markets to pay more, and then from a video front, compete with YouTube?
I think it's worth a health check on Spotify generally. Like at the end of 2022, this was a $75, $80 stock. It's now $689. Like clearly something's going right there. I spend quite a lot of time on Spotify. I know Kara does too. They're still dominant in certain categories. Like how do you see them as the beat reporter?
Yeah, no, they absolutely are the biggest music streaming service. So they have owned that category completely. Part of the reason the stock was down at that time was because they had been investing so much money in podcasting.
Spending, yeah.
And the investors didn't like that. Now, in this past year, I mean, they switched to a loss now, but they were profitable for a full year. They showed they can do this. Investors loved that. And so I think they just have this new confidence that they're going to spend their money more wisely and, if necessary, flip the switch to turn to profitability.
Now, that was a big message from Ek himself. I leave it in profitable hands. I leave it on a high, basically. What's he leaving to do? Because he's staying on as chair, he's going to be there for strategy. But he has been active in Founderland, building new companies and new ventures and backing defense ones, health ones.
Exactly. So he didn't really speak about that. He really kept it focused on Spotify. But it does seem like he's going to spend more of his time in his investments, probably focusing on what they're up to. But he is, again, really saying he's going to be involved in the day-to-day with Spotify. He's going to be sharing his office as he does with Alex and Gustav as well.
Ashley Carman of Bloomberg, so appreciate the time on all things Spotify. Meanwhile, coming up, we speak with Microsoft Security Corporate VP Asu Jackal as the company unveils Microsoft Sentinel or improvements to it about a unified focus on security. This is Bloomberg Tech.